planet today. All right, everybody, I hope you're doing well. It is 8:46. Rant over. Welcome to Market Masters November 11th. We are hanging out. It is cold here. It went from fall to winter really quickly. Happy Veterans Day to everybody. Yeah, it is 27 degrees, and my electricity bill is about to jump from about $400 a month to $700 a month because my 7-year-old doesn't know how things work. Let's check in real quick live on the great Mondami trade. Yep. Miami Exchange just keeps rolling higher. Just keeps rolling higher. All right. We're going to dive into this in a second. Today, we have a lot going on. Don's going to have an event today at 2 o'clock, and you need to be clicking the link right away to get in there to reserve your spot. Today, we're going to talk about momentum. We'll talk a little bit about the old money printer. We have the runner coming at 9 o'clock, and big news, big development out of SoftBank. If you don't know what SoftBank is, let's introduce you, because that's probably where the next financial crisis is coming if it doesn't come from somewhere else. Good morning, John. Good morning, Trader Ben. Good morning, IEEE. Yeah, Smoky Tall, Texas here, Secret Agent Charlie, and Eric in Northport. Good to see everybody. Again, guys, if you have a name that is impossible to pronounce, change it. That way I can say hello to you. It's very, very difficult to have 15 different letters that I have to spell. I don't want to do that. But all right, let's dive in real quick. Why are you joining us? Well, you have a little bit of a sell-off this morning looking at the old futures, right? Not much, but just enough for people to go, well, wait a minute. We thought that momentum was returning to this market. You see gold moving back to 41.50, silver at 51. So the risk on environment for that is up, but Bitcoin, a very solid proxy for liquidity globally, has pulled back this morning down to 104,765. S&P 500 currently just chopping right at that 68.40 level. We're going to talk about volume weighted average price in a little bit. We're going to discuss how to anchor that and utilize it so that you can keep a very close eye on what the market is defending from yesterday's close. But first, before we do that, again, reminder, these types of moves pre-market, they can preface a big shift in events. We at momentum right now, we're basically even, which is a little bit surprising given the fact that there's so much optimism around the reopening and the projection that there will be about $500 billion added in liquidity injections through, it's not quantitative easing, don't worry. They came up with a new name. It's awesome. It is, I'll pull that up in a minute, but the Treasury General account, about $150 billion, that will be injected into this system as well. And it's going to be some chop along the way, a lot of chop along the way. The term that they used for the expectation, again, quantitative tightening will stop December 1st. Second, strong hints suggest the Fed will restart QE in 26 and allow its Treasury holdings to expand by $20 billion a month, largely via bills, according to Michael Howe. But New York Fed President Williams was quick to correct and say this is not quantitative easing. Rather, this liquidity will, quote, support financial stability and the smooth functioning of financial markets. It's not QE. Just be aware. Don, now you know. Momentum intraday is even. We have come back from the brink of a very significant downturn. Now, keep in mind, we had seen recently a move down into the minus 40s. But what has happened? Selling pressure over the week has alleviated. We haven't seen this massive surge in buying, both on the Russell 2000 and on the S&P 500 and NASDAQ. We still are in a little bit of a danger arena. So keep a very close eye on this. With NVIDIA falling the way that it did and CoreWeave falling the way that it did, there is all that chatter once again about valuations as if they mattered on the way up. All right, so SPY, NASDAQ, Russell, keep a very close eye on the FNGD. This is the leverage in the system. And when that is above its 50-day adjusted moving average, EMA, forgive me, exponential moving average, on that daily, that's where we are exercising caution. That's where I take shots to the downside. And on the other side, the banking stocks have held up well also. The FAZ, which is the inverse ETF for the banking stocks, has dropped below its key moving averages as well. And as you can see, not a lot of good things have happened in the past when this breaks above key moving averages. That is the March and the April sell-off. This is the Nikkei crash. And then we go all the way back to 2023 when the 10-year bonds went to 5%. And a lot of banks were facing, on paper, solvency challenges. This, of course, is your Silicon Valley banking crisis back in March 2023. So everything looks okay for today, which means we'll probably see a little bit of chop. We'll be focusing on intraday trading. We'll walk through a couple different trade ideas when we get to the 9-10 point. We have the runner coming up at 9. But first, let's just talk about the market real quick. So the shutdown resolution is likely going to boost risk appetite. You're going to hear a lot of chatter about the Treasury General Account and whatever the hell it was that the New York Fed president said was not quantitative easing. But markets were ticking higher as Congress nears a deal to end the record U.S. government shutdown, restoring data flow and easing policy risk. Now, do we want that data? Well, Don doesn't care about the Commitment of Traders report. But the other data sets, right? Inflation, CPI, PPI, a recalibration of inflation, the CME, focusing obviously on the jobs report, the official jobs report number. That is going to create a flurry of report releases relatively quickly and speculation around the health of the U.S. economy. Now, obviously, a lot of data and a lot of headlines creates a lot of noise, which creates a lot of chop, which creates a lot of shifts and moves. And this is why we got to pay very close attention to options flow. We need to be paying attention to ghost prints. We need to be paying attention to all of the other tools that we have here at TheoTrade to help us get out ahead of this. We want to know what other people know. And that's very, very critical to know in these environments where we have largely been operating in the dark. And back in 2022, we had a similar situation. In February of 2022, the markets sold off a lot of darkness because of the lack of the Commitment of Traders report. That made it difficult for us to know what hedge funds were doing. But here's the thing. Hedge funds knew what they were doing. And when we came back into that Fed meeting in March, we had a big pop, a big rally before a resumption of selling into that weak market that transpired. Right now, liquidity is expected to remain ample for this quarter, but we are expecting a top at the end of 2026. And this is going to be critical because every single headline that comes out, especially heading into the end of the year, is going to lead to the possibility that people simply walk away. We have had a very solid rally on the Qs going back 7 months. People might just want to just pack their ball up and walk away, and that can create volatility. So once again, we're watching momentum. We're watching the impact here. Obviously, the sentiment is bullishness, but we just have to pay very close attention and react. This can provide some support and rotation into cyclicals and small caps. The Russell has been under a lot of pressure for the better part of a month and a half. I want you to keep a very close eye on the TNA. This is the bull ETF for the Russell 2000 triple bull ETF. And if we can get back above this adjusted EMA on the 20-day, that would set up for some bullishness. But for right now, we had a little bit of a move up yesterday, coming off that bottom on November 7th, and now a little bit of a trickle down. The question is, how will this market move? Will this be a process of continuation in this negative channel that has been happening since October 26th? Or is this the start of a new channel to the upside, which would consist of higher highs and higher lows? Profits will be taken along the way. We will likely see some selling and then the resumption of that positive trend. But do not think that it's just going to be a straight elevator up. That's not how markets operate. We are back at the levels that we were at back on November 5th. And we will look to see if we can maintain and hold these key moving averages. Once again, big sell-off that transpired. We had retested that 50-day EMA 3 times earlier this year, and each time it has come out with higher highs. So once again, the bias is to the upside, but keep a very close eye on that 20-day adjusted. And if we break under that 50-day again, start thinking very bearish, and we'll start looking for what the catalyst is that would lead to that deeper sell-off. Tech and AI are under pressure this morning after SoftBank selling. Look, this sells a lot more. SoftBank dumping its position in NVIDIA. This tells you a lot more about SoftBank than it does NVIDIA, but AI stocks are dipping lower after this headline hit today, sparking valuation concerns among leadership churn. Did it matter on the way up? No. What matters and what matters for a company like NVIDIA is the liquidity and the leverage in the system. The AI correction could deepen. We want to watch for hedges via puts and short-dated spreads in semis and mega cap if that volume starts to pick up. You're watching SMH, which is the ETF around the semiconductor. The Qs, obviously, NVIDIA being the largest by weight on the NASDAQ. Palantir and NVIDIA, both of which Michael Burry had been shorting with a massive multi-billion-dollar put position against NVIDIA and Palantir. And once again, it's very possible that he has already exited that position for all we know. NVIDIA had fallen from 210 down to about 180, and it has been rebounding since. A little bit of a drop this morning. I think this is going to set up nicely if, again, capital continues to come off the sideline. This will set up nicely for a possible reversion trade. What we're looking for today on NVIDIA is a rebound coming through the 3-minute chart. What we're looking for is the 8 adjusted EMA to cross back above that 20, and we will simply set our stop at the 20-day moving average. NVIDIA calls for Friday would be the trade. Obviously, there are not daily options built around this, but once again, the SPY and the Qs will have the exact same rules, and the Qs have options that expire today. Now, why are we paying very close attention to this? Because, once again, if momentum returns to this market, NVIDIA is the alpha dog of the financial markets. They are the largest component of ETFs. They are the largest component of all this leverage. They will rally back, and we've seen it in recent days. We had this move that happened on Friday. I told you, never go to the post office on Friday, because what happened after I sat here for 90 minutes and nothing happened, I left, and the call spread that I was recommending at about 95 cents went to 250. The underlying 180 call went from about $1.80 up to $8.78 by the end of the day. So once again, just let momentum take you higher, set tight stops. We saw some nice moves yesterday, a little bit of a drop to start the day, but then we rebounded very, very cleanly, about a $5 to $6 move on NVIDIA. If you're using short duration options, you're staying with a higher delta, you can walk away with a very nice gain and play defense. You just have to be in the trade, be mentally in the trade. Don't go to the post office. Don't walk away from your computer. Manage the trade actively and give yourself time to take profits if it works out, and make sure that you're playing defense and setting tight stops in this environment. On top of this, we will go to number 3, and that's that the U.S. dollar is holding up all right. Yeah, and I'm actually short the dollar into next week. I'm expecting weakness on the U.S. dollar, but the clean way to do that is shorting it with the UUP. I don't know what is going on right now. This is not working. Maybe my computer's not working now. Oh, great. Let's switch over. It's time. We'll switch over to our good friends at the old Thinkorswim, UUP. Come on. There we go. There's the dollar. Oh, little fella. All right. So I have volume weighted average price up, but you can see we've been trending a little bit lower on the UUP for the better part of a week. And clean way to bet on this, what's actually nice about the UUP is that you can short it going out to the 28 level for 2 Fridays from now. And it's probably going to cost you no more than 8 cents, maybe even less than that. Might even cost you 5 cents. I'm just looking for a continuation in this move heading into 3rd Friday of next week. All right. What else we got on this? Well, while the dollar steadies, while oil and emerging markets attempt to rally on easing political risks. Very nice. FX and commodities reflected that global risk appetite. Looking for trades on oil and metals as the dollar does pause. watching the EWZ and the EEM, and the DXY, of course, the dollar index, watching the US dollar against the Japanese yen, oil and gold strength, and emerging market inflows. Once again, looking to see if the risk returns to foreign markets in this environment. Let's see if Finviz has come back. Look at you. You guys did a great job. All right. Here is the EEM, Emerging Markets ETF, and same rules apply. Looking for a continuation of momentum. Capital flowing from all around the world into emerging markets would be a bullish sign across the board. And then obviously watching gold and silver. Remember when everybody was saying that gold was crashing and that the world was going to end? Yeah, that lasted about 15 seconds. Again, all roads point to more monetary inflation. All roads point to higher gold prices and silver prices over the long duration. If you missed it, you can sell spreads to the downside on things like the GDX and the SIL. All right, it's 9 o'clock. Charlie, what do you got? There he is. All right, not right on time. Very prompt, unlike me. All right, what are we looking at today? AA. Alcoa, not Alcoholics Anonymous. Alcoa, bouncing, a little bit of chop, but once again, same thing, same story that we just talked about a moment ago. The idea that we are looking for a continuation of trend to the upside, particularly on commodities. So this has moved 38.20 yesterday, taking you up to 39. And the clean thing that we're looking for is on this 15-minute chart where there is looking for a resumption of this trend. So AA continuing to move higher. I actually like selling a put spread on this instead, simply because this is something that I want to own. As I've said a couple of times, China continues to engage in much more monetary stimulus. And we will have this conversation about the United States and its non-quantitative easing. Non-quantitative easing, or quantitative easing, however you want to define it, is bullish when the US does it, when the Fed does it. It's bullish for bank stocks. China is really the core story here when it comes to commodities, because when they engage in easing, that's beneficial for all the all the different commodities: palladium, copper, platinum, and aluminum. So from the longer term perspective, it doesn't matter to me if Alcoa goes up or it just holds at these key levels in an environment where we're anticipating more capital expansion and we're moving deeper into the liquidity cycle where commodities tend to do better. This is a nice environment where some people don't like to sell spreads. I like to. Look, I get it. But I have said time and time again, if I can make 3 trades that have an 80% probability of profit, 20% return goal, and 100% annualized, what are the odds that all 3 of those trades finish in the money and make me money? All 3 of them. It's over 50%. 0.8 times 0.8 times 0.8, I think, is 0.512. I'm pretty sure. Okay. If I do that with 30% call options, 0.3 times 0.3 times 0.3, you've now taken me under 5%. And that's why, again, I can be defensive. I can manage these trades. I can focus on the things that I want to focus on. And if I want to own the stock too, I'm picking my own price, which is another very important benefit of doing this. So if I went even if I went all the way out into like December, I'm trying to find a cleaner spread, maybe the day after Christmas, I might be looking for December 16th. These are big, wide strike levels. So I'm looking at $5 levels on this. Maybe December 5th. There we go. So something as simple as the December 5th, 34. I wrote the 34 on December 5th. I'm pulling the math up right now. And then I bought the 32. Forgive me, 31. it can deliver a 10% return, 86. This is not a fun trade. This is dumb. But what I'm specifically looking for, I'm just going to lay this out for you. Okay. What you're going to do is you're going to go to Thinkorswim in a little bit, and you're going to start to toy with the math of this. What you're going to do is you're going to look to buy a put and sell a put. You're going to sell a put that is higher than the put that you are purchasing. This is known as a bullish put spread. What you're looking for is a probability of profit over 80%, and then a return based on the amount of margin that you're putting in around 20%, somewhere between 17 to 20%. And then basically that's it, because what you're targeting is a 20% return, and you're picking a stock price that you're comfortable buying Alcoa at. And for me, it's going to be down here under these key moving averages, which you've seen time and time again. Alcoa has found support this year. I just wish there was a little bit more liquidity at 9:07 in the morning for me to see. But maybe look at the 34.32 for December. We'll dig into that a little bit later today during our live session, and hopefully we have something that we can operate with. HE, Hawaiian Electric, underrated stock. Very good company and chopping around a little bit. But if we look at that 15-day EMA, just looking for something, this is something that I actually want to own. And one of the reasons why I want to own Hawaiian Electric over the long term, this is a very, very good company in the world of geothermal. And geothermal is continuing to get government support across the country, particularly out in Utah and in Nevada. But don't sleep on this. And it's not like electricity in Hawaii is cheap. Looking at this, the way that I'd be trading this, it's not going to be an earth-shattering opportunity here, but you're looking for a move back to about 1160. So in here, buying the stock, setting a tight stop, and looking for a move back into this range. Big move down, right? And this all comes back on the side of the earnings report that came out. But as I've noted, long-term geothermal in Hawaii, long-term any of these geothermal companies, very, very strong, very beneficial when it comes to the ongoing needs of electricity in U.S. manufacturing. You're going to hear a little bit more about that in the future. Hive Digital. Now, this is Bitcoin, crypto across the board. You're going to need momentum to return here. So I want to not just go from the 15-minute chart. I want to go back down to that 3-minute chart. And as you can see, we've had some moves here. I need momentum to come back to this name. I need crypto to pick back up. And when that happens, Hive has very strong upside, 560 from the current levels is what specifically what we're looking for. This has been in a very negative channel for the better part of 2 weeks. But I will just point this out, particularly looking at the 30-minute chart. When this gets into oversold, what happens? It rebounds. So right now, kind of no man's land here. But if we get back above that EMA of 50, I will be a buyer. 481 is your target entry. And then keeping a tight stop and looking for a reversion, looking for this to continue pushing higher. On the downside, Lamb West. I don't know why you don't want McDonald's potatoes, but I do, especially on a day like today when it is cold. But Lamb West has been under a lot of stress. Lower highs, lower lows. Same thing. This is just line in the sand. You stay directionally, right? You short from here. And if it rebounds, you cut your losses and you look for a move back up. This has already moved 10% about a week, but we're back under that 50-day EMA. It has been under pressure. So Lamb West, something as simple as going out to next Friday and doing the exact same thing. Put spread. Pretty simple. Why a put spread? Because that's going to insulate you from any significant correction. So what are you doing with the put spread in this situation? Well, instead of selling a put and buying a put at a lower level, you're buying a put at a higher level and selling a put at a lower level. And what you're doing in this case is you're looking for the stock to continue to break down to that specific level. So if you look at the $60 put right now and the spread's a little wide, maybe if I bought the 62.50 put, gets a little cleaner around 260 at the moment. And then I wrote the 57.50 put. It's going to create some interesting math. Now, again, this is all pre-market, so things are subject to change. But from a hypothetical perspective, if I bought the 62.50 put for November 21st and I pay around 260 to 255, and then I write, meaning I sell someone the right but not the obligation to sell me the stock if it falls down to 57.50, what that will do is that's going to cost somewhere around 30 cents. That creates a net cost of about $225 to $230. If the stock breaks down to 57.50 on or before that date, there will be a sizable gain to be had because, again, I own the put up here. I've sold the put down here to cap out. If this stock falls to, say, $58 by the 15th of November, or let's just say the 18th of November, it's about a 77% gain. It would go to a 98% gain by the following Friday if the stock continues to remain under that key level. And the break even on this, and this is the important part, if you're buying in the money and selling out of the money, the break even for a trade like this is about $60.25. It means your probability of profit is over 50%. Your max return on risk is about 120%. And you cut your losses quickly if this rebounds. What's interesting about this trade is that if you get back up to $61 in the next 3 days, your loss would be about 16 to 20% by Friday. But that's where you exit. So you're putting up, the way that I view it, I'm risking 18% or roughly $37 to make upwards of $263 to the downside. That's trading. Is it going to go your way? It's not guaranteed, but you're playing the math and you're having a plan and you're knowing what your exits are before you make a trade. MLCO fading this as well. Melco Resorts and Entertainment. Wow. Again, we are in an environment on this 30-minute chart where if this cannot hold at that 8 EMA, next move down 875, we have moved to overbought pretty quickly on this guy. It has been a very solid momentum stock this year, and we're looking to fade this if on the daily we get back into that overbought situation. So just keep an eye on this, add this to your list, and once again, the beauty of the RSI and the MFI. Combination of oversold and overbought levels you could see on this chart. A consumer cyclical momentum stock that you should always have on your list, and you trade it based on key moving averages, trade it based on the RSI and the MFI, and we're seeing some strength here. I'm not going to go hyper bullish on this. I'm simply going to see if we can get up here, and then I will be the first man over the wall to the downside. FIVN as well, FIVN. 5.9. I thought it was a clothing store for men who were 5'9", but it's not. It's a technology infrastructure company that has shown lower highs and lower lows. And hey, 5'9's what? That's the average height? I don't know. You tell me. 30-minute chart, looking for a continuation in the rollover on 5.9. And then what's the watch list? Look, trade what's right in front of you. This is legitimately one of the great days to trade. I love when a company like NVIDIA gets these periods of extension that happen, right? We're looking at our 30-minute chart. We just came out of oversold. We had these little tiny squeezes. NVIDIA follows this to a T, by the way, right? You get both down here at the same time into oversold down around 20 on the MFI and the RSI. Look for a reversal. Look for a pop. Well, now we've gotten to the other side of this where we are extended. What are we looking for? Well, we're down here this morning. We're going to see if we get a reversion. So I want you to keep that 3-minute chart open today and start to play with that because, again, 195, this could be right back at 199 by the end of the day very, very quickly, and you'll be kicking yourself because you didn't buy the in-the-money call and trade it using this very simple strategy. Same thing with CoreWeave. CoreWeave's getting beaten up today because, again, nobody, if anyone gets that reference, I say it a lot. Again, what is that reference? And if you hit that, you will win a Pete Rose in action baseball card. There he is. Look at that. Look at Pete Rose. Dave asking about the Alcoa trade. Can you go over the buy to open, sell to close numbers again? Sure. With Alcoa, I think somebody got it, didn't they? Oh, okay. So Alcoa would be a put spread. So what you're doing is you're selling a contract rather than buying a contract, right? You're selling a put. So when you set it up, the long put, you write the put and you pick a level, a price that you are comfortable owning the stock at that point. But I continue to recommend you're focusing on something under these key moving averages. So the $34 is pretty clean. December 5th, about 38 cents. And then you would be buying maybe the 32, maybe the 33. Something as simple as like the 34 and 33 is actually pretty intriguing because it's about a 13% return on an 85% probability of profit. So again, 34 or maybe even 35, and you are buying under it. Now, the reason that you're doing this is not a cash secured put. Very important. Cash secured puts will require ample amounts of MFI is you're going to look for the ADI on Thinkorswim. Go out to December 5th. You're going out a month. And you're happy to buy Alcoa if it pulls back. You're happy to buy it. I can't say that next year, but I will say it for now. Money flow and ADI. All right. All right. Again. Plug power. It's a Norm Macdonald reference. Oof. That thing. Yikes. Well, again, 28% short float on Alcoa or on Plug Power. And the hydrogen business is not exactly what it's cracked up to be. But I do like the fact that this has kind of had these moves, right? 30, 40 cent moves. Big move up, big move down. Again, just following 3-minute chart, followed 15-minute chart, and looking for these types of moves. 20 cents on a $2.40 stock can make your week if you know what you're focusing on. So look for Plug. We're going to look at the 30-minute chart, and we're going to be looking for oversold conditions if we get there. But that's going to be added to the list as well. And RGTI, Rigetti Computing. These things are still in play. Gosh. As I noted, these things got hammered thanks to the sudden announcement that the big boys won the battle for quantum computing. Stock's gone from about 60 down to 31. Continuation, follow the trend. It has broken down on the daily. It is breaking down on the weekly. This is in trouble. So this is something that you can really take a very hard shot at and look to drive it into the ground if you can. It's going to be expensive to short because, again, the volatility associated with it, and pay very close attention to whatever the IVR is. I haven't seen that. I will have to take a look at that before I definitely go in on a trade. But I like something as out of my mind, and I would be watching Ghost Prince for this as well. This kind of has a black swan feel to it. A January 16, 20 put at $1.12 has my attention. This is not oversold on the daily. So a $3, $4, $5 move on this could deliver another 20, 30%. What about Lyft? What about Lyft? I got to jump. Don's going to be putting on some music in a minute. Don's going to be back here at 2 o'clock as well. You haven't clicked the link in the chat, I will fight you. $24. Good momentum on this, actually. And same thing, paying very close attention, just following momentum. We are overbought here. We break under that 8, you go short here to here, but looking for a continuation to trend. This is a forgotten name. It's a forgotten name. Long term, this could be a beautiful setup. So, Lyft, I don't have a trade on it, but I will definitely look at this when I am back today for the last half hour of the market for the market close, and we will go from there. All right. I like Lyft. IVR is only 26 on RGTI. Yeah, I'm going to short that. It's a black swan trade or a white swan trade. $20 put out into January. Look, it's going to be very low probability of success. I'm just going to point that out. Probability of profit. It's about a 15% probability of profit, but you just need a move. If this got down to say 28 by the 18th next week, it'd be a 36% gain. So you could also just do a put spread like a normal person as well. Dennis is looking for the schedule. We'll get it in there. Look, we got to go listen to some Van Halen. And if Don doesn't play Van Halen, then I'm just going to go listen to Van Halen myself. I hope everybody has a great trading day. Thank you for joining me. There's lots of things that you could be doing at 8:45 in the morning, and I appreciate that you spend it with me each day. Don's coming up in a moment. I'll be back again later in the day, and then 1 o'clock with my NVIDIA team. I hope everybody has a great day. We'll talk soon. Cheers.